Well, Dalal Street recorded its biggest single-day fall in 2 months. On Friday, the fall erased all of the weekly gains. The sensex and the nifty ended absolutely flat. The nifty bank fell the most on the Editors Roundtable today. Backstreet's back and so are the FIIs. A deep dive into macros in April and why TVS continues to outperform larger peers like Hero. I'm Sonia Shenoy and with me are our editors Nigel, Mangalam, Prashant. Folks, the Backstreet Boys all in the house today.
The Backstreet Boys Jugalbandi is here, so we're expecting some...
I think we're more of the backstage boys than the Backstreet Boys.
Mangalam, by the way, was there, right? Yesterday,
yeah, I was there.
At the concert.
You know, it's not about the music as much as it's about nostalgia. You went there, you bumped into old people, you thought that you had reversed time, went back into
old people or...
I mean, the average age of that concert was 32, 33. You can say that's old or not, but you know, there's always a downward skew because most concerts you have 16, 19-year-olds, 21-year-olds. So this one really had 45 plus 50, the geriatric ward basically.
It's more like Backstreet's backache, right? I mean, if you have a backache, then you're good to go for Backstreet
Totally,
Boys.
and the best part is that because most of the people who attended had backaches or shoulder issues because of their age, they didn't have people climbing on the, on the boys to watch the stage. So yeah, it was a good, calm concert which ended at 9:30, so that everyone could go home and then report to work.
Okay, and that's what we did. And the Bulls were back, but then, I don't know, the Bulls got lost somewhere through the course of Friday.
I think we got very used to this 4-day, weekend or maybe 3-day and 3-day week. And this week, in fact, it felt like we had 7 days. But actually, there were only 4.
Yeah.
I mean,
So how are you going to get by the next 5?
it's going to be difficult.
I think it's something to do with earnings, right? So many earnings and exhausting. But, on the market, Sonia, we had, it was almost a autopilot kind of a move that we were seeing, and it was interrupted by something which was not autopilot, which is HDFC, right? I mean, out of the blue, the announcement came with regards to MSCI, and Friday, that is today's fall, largely was actually 160 points. I think the market was down 180, 160 points were because of the HDFC twins. So that has punctured the move a little bit, but these things rarely last beyond just that day. Nothing fundamentally has changed. These are weight changes, passive funds, index funds make changes. But as I said, this is nothing fundamental in that sense. New highs, even after Friday's fall, are not very far away. Bank Nifty on Thursday evening was 1% away. It's down. It's about 3% away. I mean, the Bank Nifty was down 2% on Friday. So the highs may still come. So we'll watch out for that. The bigger question, though, is, this holds true for the last 18 months or so. Will we, even if we get to a new high, will it be a decisive break out of this 18, 19-month range that we have been in? That's, I think, the bigger question, rather than just kind of getting to it and then sort of not doing very much. And that's the case with the S&P as well. The S&P 500 in the US, it gets to about 41, 4200 and does nothing. And that's been sort of the timelines there have been pretty similar. Earnings season so far, there have been more upgrades as compared to downgrades, and I think that's a very good thing. Not by a huge margin, and like the third quarter, it is still banks and financials where the upgrades are much more than downgrades. Without banks, the picture looks much more mixed in that sense. And I just want to leave you with this one thought. The fast money, in the sense, I'm not talking about long-only institutional money, but hedge funds, etc., generally, the perception is that there's a fall coming in the US. In global markets, they are primed for a bit of a large fall. We'll see if that were to come true or not. And if that comes, many here believe that India is now decoupled once again. I think we should kind of disabuse ourselves of that thought that we are decoupled. We never decoupled in that sense, maybe for very short periods of time. But we'll see if the consensus is right about global markets, especially US markets, where positioning also is heavily short.
Oh, absolutely. And we have Ashwini Agarwal, who's joining in now, founder and partner at Demeter Advisors, to help us wade through the market and all that we've been seeing so far. Ashwini, do you agree? And welcome to the show, first of all. Thanks for being with us on the channel. Do you agree that India may have decoupled from its global peers, or do you think it's too soon to take that call?
Sonia, thank you. Thank you for having me here, and good to see all of you there. I don't think we'll ever decouple. See, markets, at the end of the day, the market sentiment transcends markets and transcends the world. So if there's a huge bear market elsewhere in the world, trust me, it will come to India in one form or the other. You might fall less than what some other market does. That's possible. But have we completely decoupled? I tend to agree with Prashant. I think let's not disabuse ourselves of that notion.
Okay, well, for now, though, Ashwini, things have rather, forget Friday's session, it's just one day. Things have looked good, haven't they? Nigel has put together some data. We're saying Backstreet Boys are back and so are FIIs, Nigel, right?
Well,
in a big way.
It's what? Backstreet's back.
All right.
Did they bring the money with them?
So Backstreet's back, all right, but seems so are the FIs. Let's run you through the scripts piece that I've put together. The Indian indices, if you're just looking at it in the first half of the year, we were relative underperformers, right? The first half, that's the initial 2 months of the year. But then we bounce back, and we bounce back in style. And if you just compare us with our peers, well, we were underperformers initially, but then just take a look at it. We turned outperformers. And if you're looking at it, well, a couple of those indices were doing well. Taiwan as well as South Korea. So I was wondering, did the FIs, did they have something to do with it? Well, let's dig deeper. Then you'll say, no, Nigel, year to date, FIs are still sellers. They're more or less flattish or mild sellers if you look at the flows from the FIs in 2023. And it's far less, though, in what we saw in entire of 2022, when they sold close to around $7 billion hard. So if they were sellers, then how can they be playing a role in this big pullback? Well, you need to divide this data point into two halves. One is the initial performance, when it was underperformance that we saw. At that point of time, the FIs, look at the month-wise data. They sold close to around $4 billion odd. But what happened post that is that they pumped in another $4 billion. And that perfectly tallies in with what we have seen, because that's the period when the markets did bounce back. But you'll say the flows are coming in there, but how do they compare with our peer groups? Well, just pull up some of those indices that we were just talking about. South Korea and Taiwan, well, they were outperformers, right, earlier. And they got the big money. But take a look at what's happened after that. South Korea, well, the flows turned more or less flattish. While from the Taiwanese index, you're seeing $2.5 billion of selling. And just take a look at the Indian markets. We have gained most of that, close to around $4 billion of inflows. So it seems that, that the FIs, they have had an impact on this market. Yes, you'll argue valuations were on our side. You have earnings momentum as well. But the FIs played a role. So Backstreet's back, all right. But so are the FIs. The only question is, the Backstreet Boys are going to go back. Hopefully the FIs hang on out here.
All right, Nigel, thanks a lot for that. That looks interesting. You look like the sixth Backstreet Boy out there when you're standing with those five. But, Ashwini, the point is well made. The FIs saw valuations, attractive in India. There was a fair amount of sell-off. Then India looked like one of the best macro places to be. But now, with the concern about global equities looming, do you think that, the FIs perhaps will take it easy and not buy anymore? Is there a risk?
Mangalam, it's very difficult to predict institutional flows in the short run. Okay, I don't think I or anybody else out there can say with any certainty, what FII flows will do in the short run. But let's zoom out and take a look at the medium-term horizon. The world is in a difficult place. You're seeing what's happening to the banking sector in the United States. China as an investment destination seems to have fallen out of favor with a large part of the emerging market investor world. And in that context, India is looking quite good. But if you zoom out and think a little bit more about it, I was reading an article today that in last night's Apple earnings release, India was mentioned 20 times by Tim Cook. That's something that, made me sit up and take notice. Of course, he was here a couple of weeks ago and India must be, fresh in his mind. But the fact that India got mentioned 20 times in the earnings call of Apple tells us something. And, it has a huge signaling effect to the rest of the world that India is open for business. And if Apple is doing so much in India, maybe the others will sit up and take notice. So that is what I think is really enthusing for me as an Indian, as an India watcher, that we seem to be finally finding the place that the world is interested to do business with. How it will show up in FII flows in the near term, I don't know. But do I think that it makes me a little more positive about India from a medium-term perspective? Absolutely.
Right. That's interesting. Apple gets sub 5% of its revenues coming in from India right now. Yeah. And Rather, the market share of Apple in India is sub 5%, as against China, where their market share is 18%. So if they get more from here after the store that they've opened, probably, India is open for business, and let's see whether FIIs come or not. But that's about rich people, rich things, all iPhone things and all of that.
Time to go for a ride on Sonia's motorbike.
Yes, totally. Sonia,
Which one do you want to go on?
TVS Motors this time around.
A lot of the fan group out there are saying with Sonia we'll go on any bike.
Any bike, even if it's a bicycle, I guess. But,
All right, but tell us.
Guys, I don't know how to ride a bike. I just
wow.
We're just
So how are
warning
people
you.
telling you that, okay, Sonia, we'll take you on our bikes?
Opinion.
But tell us more, Sonia.
Okay, so you know what? This week you had a lot of auto numbers come through, right? And all of them were above street estimates. But we're going to talk about the outperformance that TVS has seen compared to peers like Hero, and it's pretty stark. So that is what we're going to focus on today. It's a tale of two bikes. So of course a tale of two stocks, but we're also talking about a tale of two bikes here. Now, TVS Motor has significantly outperformed its peer Hero MotoCorp in the last many years, and here's a deep dive. If you look at it, this is what's happened this year. TVS, the stock is up 13%. Hero is down 8%. If you look at the last 3 years, there is a significant outperformance that TVS has seen. It's more than tripled in the last 3 years. This is from May of 2020, while Hero has barely gone up. It's done nothing for investors in the last 3 years. Now, let's corroborate this with some earnings data as well. If you look at the 3-year revenue compounded growth, just look at it. TVS has grown 17% in the last 3 years, while Hero has barely grown 5%. That's on the revenue front. On the earnings front, it's actually a different picture altogether. TVS is up 30% on the bottom line, while Hero is down 3%. And now what's happened is, over the last couple of years, TVS's market cap has outpaced Hero MotoCorp. It's now at 58,000 crores, while Hero is at 50,000 crores. Very interesting. The market share trends are even more interesting. TVS has grown substantially in both motorcycle and scooter market share, while Hero has fallen. So just look at that. From FY20 to FY23, the motorcycle share of TVS has gone from 6.7 to 8.9, while Hero has actually fallen from 58 to 46.9. Look at the scooter market share, where, of course, there's electric vehicles as well. TVS has gone from 18 to 23%, while Hero MotoCorp has remained stagnant in the scooter space. So that just gives you a picture about why TVS has outperformed quite a bit. Now, what has worked for TVS and what has not worked for Hero? We decided to put that on board as well. Let's take a look at what has worked for TVS Motor, right? They have a very strong R&D. They've invested a lot in some of their new products as well. They have consistently delivered new launches in both the scooter and the motorcycle segment. They've identified and tapped product gaps very, very well, whether it's the Raider 125cc, whether it's the Jupiter and the N-Torque in the scooter segment, whether it's the Ronin bike in the 220cc segment as well. So that's what's worked for TVS. They have found the product gaps, tapped it well, and done well in that segment. What's not worked for Hero, one is, of course, rural markets have slowed down in a big way. But the other thing is that in exports, in scooters, in electric vehicles, Hero has been very late to the game and has failed to make inroads. In fact, because of Honda's entry in the mass market segment, now Hero is all set to lose market share there as well. So, that's the question I wanted to pose to Ashwini too, because Ashwini, what's happening here is, in the last 3 years, there's been this large degree of, outperformance that TVS has seen versus Hero. Do you think the tables could turn anytime soon? Or do you think that this will continue to be the case? And if you don't want to comment on individual stocks, and how are you feeling about the sector itself?
Great analysis, Sonia. Thank you for this question. The way I think about it is that, specifically for Hero Motors, and by way of standard disclaimer, I don't have a position here. What's not worked for them is exposure to rural India, and you touched upon the fact, that fact, as well as the fact that their product introductions haven't really been anything to write home about. What it has also suffered from is high raw material prices, specifically because they were in a very price-sensitive space of the market and their exposure to rural India. What I see changing in the next 12 months for Hero is the performance on the margin front, because the raw material price pressure is definitely coming off. You can see that in prices of a whole bunch of input costs, and that's already visible in the Q4 numbers for Hero Motors. Rural demand outlook is a little more hazy, but if I were to be a betting man and think about it, you have TVS, which has done really well, as you point out, and it has very strong earnings growth going ahead. given how they are positioned in the marketplace. But the positive surprise, and stock markets are always about surprises, could be, more in favor of Hero Motors, especially if the rural demand bounces back. The commentary from the company is a little more interesting. They are talking about double-digit volume growth this year. And you can also see the margins improve as cost pressures fade. So, who knows? The next 12 months might turn out a little bit different than how last 3 years have been. That would be, a synopsis that I would like to put out.
Okay, all right, Ashwini, I'll leave the analysis of the two-wheelers to you and Sonia. But, I love riding, and the Royal Enfield is the only one that meets the bill as of now. But Sonia, as you have been telling us, the Bajaj Triumph, can't wait for that one. Let's see how...
27 June, right, is when it's coming out.
27 June in London.
In London.
So we'll wait for it to come. Are you going to London? No, the cost of the bike will get on the travel itself. But let's focus beyond the fourth quarter numbers, and let's focus on the parameters that we have and how India is faring. Prashant, you've got a full list of that. Tell us, how's it going?
Simple high-frequency data, Nigel, because fourth quarter at the end of the day is backward-looking data, right? We're already in the first quarter, in the middle of the first quarter. What I did is I just looked at some 10 or 11 parameters. This is data points we get every month to see whether F524 has begun on a strong note or not. The first one is the CMI data on unemployment. The numbers will come up on your screen. And what I've done is I've taken, data from January all the way till April for all these indicators. And you can see the numbers speak for themselves. CMI unemployment number, a pretty steady picture. Power demand is, it fell. These are year-on-year numbers, but the fall has actually reduced. I mean, it was down 2.1%. It's down 1.8%. Air passenger numbers, on your screen, and of course, fares are going through the roof now because of added troubles recently. Rail freight number, this is important. Look at the acceleration we've seen in April over the month of March. Again, year-on-year numbers. Look at credit growth numbers, 15% in March, 15.8% in April. GST collections, we all know, people say that, GST collections is inflation, nominal, but corporate profits are based on nominal growth. They're not based on real growth. So one has to keep that in mind. And that's the reason I'm saying this is not, how India is looking in at April. This is how India Inc. is looking in April, because most of the data points relate to what corporate profitability will look like. Look at manufacturing PMI, 57.2, sharp acceleration as compared to the previous month. Services PMI, again, even sharper acceleration. Two-wheeler sales and passenger vehicle sales, two-wheeler, of course, looked much better. Passenger vehicle sales growth also picked up a little bit. Here again, there is this constant thing that maybe companies are doing channel stuffing. They're getting stuff out of the factories, but the retail numbers are not sort of keeping pace. And I think the last number it speaks to that point. The passenger vehicle registration in the month of April is down about 5% as compared to about a 21% growth that we saw in the previous month. But overwhelmingly, across all these parameters, it does look like the momentum that we had in the month of March in F523, at least in the month of April, that very much is still there without a doubt. We'll take a very quick break here. Ashwini, of course, is still with us. We'll put some of these points to him when we come back. We'll also talk about the FMCG stocks, the performance, and where valuations stand for them. Stay tuned.